Everybody, it's Seth and Paul for the Everything Money channel, Everything Money podcast. Today we talk about what we should be looking at when investing in a stock. Paul, it's kind of confusing. Stocks are up and down. I'm sure people want to buy, fear of missing out. We go over all of these topics on Everything Money. Join us on YouTube. Welcome to Everything Money, everybody. It's your pal Paul and Seth here.
Something Paul and Seth.
I said your name first, which is kind of awkward.
Why is that?
Oh, it's because you said mine.
True.
Paul, why should I buy certain stocks and not certain stocks? We had a wonderful conversation with a friend of ours, a dear friend,
of course,
recently, and he said, "Hey, did you see the stock price? I think I should buy some."
Wait, you and I had the conversation?
You did, and I was next to you. We were on a bus traveling.
Oh.
And a buddy of ours said, "Hey, did you see that price? Got any hot tips for me?"
Oh, yeah, and I know what you're talking about.
And now you just kind of, I know you, and they don't.
Yeah.
So they say like, "Hey, you got any hot tips on these stocks?" And I can see you inside being like, "Oh, that's just adorable." But you had me read a book.
Did you read it?
I'm about 50 pages in, which is monumental for me.
Dude, you got it like 6 days ago. It's like 14 pages long.
Yeah, it's like a short little book. It's more of like a children's book, actually. Who's it by? Joel
Greenblatt.
That
was slightly, I don't know, racist, but it was something because...
Why?
You know, he's Jewish, so you're like, oh, Greenbaum.
Oh, he's Jewish. Boy, Paul, you took it right to there. Greenblatt. What is the book called? The little book that...
The little book that beats the market.
Yeah, tell me about it.
So this guy's a hedge fund billionaire or something. I don't know. He wrote this book because he wanted to keep investing simple for people and give a process that does very well. So his idea is if you rank the best companies based on return on assets and earnings yield.
Anyway, go back. You were saying,
so
what is the book about?
His idea is he wants to make sure that people buy companies that matter based on certain metrics that he has seen that matter the most. So return on assets, he considers to be a very important metric because it says, hey, how is a company able to deploy and make money on the assets they currently have? The higher it is, the better it is. And earnings yield is, in a simplistic form, it's not really this. It's basically the reversed PE ratio, price to earnings ratio.
Now you're getting confusing now. You've lost half our viewers already.
You take your earnings on a company and divide it by the price of the company.
Okay.
It's not exactly what he means.
Price per share?
Yes. So you take the earnings per share divided by the price per share. And you rank these 1 to 1,000, 1 to 1,000. You add their ranks together. And then the lowest 30 or 50 of those combined ranks, you buy every year and you sell and you just do it once a year and keep rolling with it.
I think in its simplest form I'm reading, he wrote the book to describe to young kids. He wanted to describe the market to young kids. And
he talked about he wanted to be able to tell his kids how to invest.
And so he basically says that there's this guy, imagine there's this company and he owns shares and his name is Mr. Market. And
so this is not his. This is a very well-known thing from the Intelligent Investor and Security Analysis.
Well,
Mr.
it's just
Market.
interesting. It really hits home with me as someone who doesn't really know what I'm talking about most of the time. In that, like some days the market is sad and the price of a company can fall, and other days it's happy and he wants to sell, he overvalues his company, maybe wants to sell it at a higher price. But you always talk about the patience of waiting for that perfect pitch to invest and become a part owner of a company.
Yes, and it's hard, Seth.
I'm finding it to be incredibly hard.
The hard part about investing is not the numbers. It's a discipline. Like now when I find a company that's selling for far below what I determine the value to be, I immediately go, what the hell am I missing?
Could you be wrong?
Of course I could be wrong. Yeah. And I'm going to be wrong in a big chunk of them. But his idea is you're going to be wrong. You're going to pick 30 or 50 stocks. You're going to be wrong on a chunk of them. But you're going to be right. And your job as a saver is to just buy the portfolio.
Now, why were you so careful at saying saver instead of investor?
Well, this is a shout out to my chess coach, Matt. Investing to me is an understanding of a company, the financial statements, and why I want to own the company. A saver is somebody to me who goes out there and puts their money into, without thinking into, which is okay, by the way. I don't mean without thinking in a bad way. I mean it in a good way. Like 99% of people should be savers. I'm going to go put money into an investment vehicle and do it repeatedly, and then over time I will do very well.
So you're saying, I mean, obviously 99% would include a majority of our listeners, Joe Schmo making 50 to 200,000 a year.
Yes, but what I'm hoping for our listeners is they hear, we talk about a lot of things money, everything money. I'm hoping they hear some avenue of which we explain that we make money, and they go, I want to focus.
That's the one for me.
That's the one for me. And I want you to focus on that. The job here isn't for you to sit there and say, oh, what does Paul do? Let me go do everything Paul does. There's things that other people do. I go, yeah, I don't want to do that. Mm-hmm. You know what I mean?
Bitcoin and magic cards, like me.
I just recently started getting into options, right? But I'm not an options trader.
What is options? What options are we talking about?
I should explain that on the whiteboard sometime, but I basically am selling options to the market in order for me to make some extra income. But I'm not an options trader. The reason I'm not an options trader is I'm not trying to get these options to buy them in a way that makes me make money really quick. I'm doing it in a way of a value investing perspective. And we'll get into it in another video. But I don't want to be an options trader. I tried recently to learn technical analysis. I didn't like it very much. It didn't stick with me. It wasn't like it rang with me and goes, oh, okay, I get this. But what we're trying to do here is when we talk about investing and saving, I want everybody to save. And when you find that thing that you want to learn more about and get more into the weeds about, that's when you become an investor. If it's financials of a company, like me, I love looking at financials. Like, it's funny, Lisa came over this weekend and we bought all these new light fixtures for my house, and she's like, oh, this is so exciting. We get to open these boxes. And I'm just like, oh, this is the worst day ever.
But firing up a Y-chart spreadsheet of...
Yep, that just makes me so excited.
Wow. You're a dork.
Yeah, I mean, I don't know if it's a dork. I mean, listen, I'm fine with that. It's just an overused term these days.
Yes.
I just like that stuff. So what Greenblatt's trying to do is take away he's trying to give you the best companies that he sees over time do well and say, don't even think, just follow this like it's an ETF. Just go to my website, type in the blah, blah, blah. It'll give you the list, buy those, and then forget about it. And a year from now, go do it again. And the hard part for that one is, right, what you'll get into in the book is these won't always beat the market. And that's what makes investing hard is it could be 3 or 4 years of this trailing the market. And I could see you, Seth, going, Paul, this is a bullshit, policy. This is bullshit.
Sure.
It's losing to the market every year. And I'm like, okay. Because not everything... The reason Bernie Madoff should have been caught a long time ago was that he just did the same thing his results were like the same every single year. You don't want people... I mean, it's funny when I hear people say, how's that person doing in the market? Oh, they've trailed the last... Oh, that's bad. It's like, well, maybe. But if their process is the right process, then maybe it could end up being okay. And it's just not the right time for that process. That's the way it works.
Yeah, I was getting overzealous recently because I pulled a lot of my money out of the market to cash, just kind of to be careful. Mm-hmm. And he breaks down in the book the idea that, like, today... the stock market may go up, down, or stay the same, and you can buy today, you can sell today, or you can just do nothing. And when
makes sense.
When he broke it down that easy, he's like, oh, I'm okay today. Like, today's not going to make or break my portfolio. And,
yes.
And then tomorrow, and then when one of those stocks dives
Has Seth grown up, people?
I don't know about that quite yet.
Seth, that's impressive. No, seriously, that's a very hard concept for people to grasp is... If you love the stock yesterday because it was going up and you don't like it today because it's going down, you're not ready for it. You're not an investor.
Yeah, I mean, like,
And it's very hard, by the way. It's even hard for me to go, okay, am I wrong?
Like we talk about Tesla every other episode because it's just an intriguing company and
what's it at
stock.
Right now?
And so you always talk about FOMO, the fear of missing out, right?
Yes.
And I don't know if it's actually I wouldn't call it a fear. It's just, I guess I'm just anxious when I miss out on things that I probably could have gotten into, right?
Okay.
I've owned almost 200 shares of Tesla many, many digits ago.
Yep.
And things like Amazon.
Oof.
What's it at now?
1,000.
1,000.
Yeah. That's a tough one.
So you look at companies. So go back on our YouTube page, the Everything Money YouTube page, and you can find in the past and coming out very soon, Paul doing whiteboard demonstrations about healthy stocks that has his eye on.
Healthy companies.
Talk about them.
So when I look at a company, the first thing I do is I look at their revenue and profit and see what it looks like. Is it consistent? Is it not consistent? Are they growing revenue? Are they growing profit? How are their margins looking, et cetera? If that intrigues me, I then go to the balance sheet. That to me is the health of the company in terms of what's behind the company. The balance sheet's kind of like when you go for the checkup. How's your cholesterol level? How are these things going? Like, are you on the right path? Like, are there issues that are not showing up now because you're just young? Same with the company.
Yeah.
Is the economy so good that your bad balance sheet is just being masked by growing sales and growing profit? Then from there, I go to the cash flow statement. These are the things that I have to look at before I even delve deep into a company.
Yeah.
So there's different levels of delving deep. Most people would look at 1 year of financials if they even looked at. So if they even looked at financials, they're going to look at 1 year.
Yeah.
1 year is useless to me. If they even look at multiple years, not going to go to the balance sheet, all these levels. Then from there, if the company hits my, okay, this is interesting, then I got to go read more about the company. Now, my investing tutor, coach, whatever. By the way, I have another one today, an options. So I want everybody to understand like how much I value learning. I have people who help me with investing. I pay people to help me learn how to invest more. So if you think that you're like, first off, you think I'm some like great investor, I'm a good investor, but I'm still working to become great. And if you think you're a great investor, you're wrong. So I look at it going, okay, from there, I then want to read more about the company. Listen to read earnings calls. It's so funny. I'm like one of the few people in the world that doesn't like listening to stuff or watching videos. I want to read it.
Okay.
Listen to these things, read them. The 10K gets very boring. My friend Gary, who teaches me value investing, he dives into the 10K like it's like he loves it. And
what's the 10K again?
It's the annual document that companies, create to explain their entire company inside and out. I mean, it's very thorough.
But you're saying 99% of people shouldn't even worry about all these crazy stocks.
No, but that's the thing. But don't go buying Tesla and Amazon just because they're hot companies. You got to avoid those problems. Those are going to be problems at some point.
I mean, they've proven
to
be up and down.
Well, yeah. Well, Amazon's, it's gone up and down, but lately it's just been up.
Yeah.
I don't know what to say. To me, I have the confidence of saying, I could be wrong on Amazon. I'm just not going to be involved with it. I just can't own it because I don't understand how it keeps going up from here.
Yeah.
Tesla, same thing. I don't understand how it keeps going up from here.
So are there different styles of EFTs or
ETF?
Why do I always say that? What is an EFT? What
it's
is
like
it?
A transfer of money thing? Isn't an EFT
that's probably it.
Isn't that what it is?
ETFs. What's it stand for again?
Exchange Traded Fund.
I think you just spit pretzel over the mic.
I did.
Exchange Traded Fund, ETFs?
Yeah, I believe that's what.
Are there different ones? Like,
yeah. Any sort of industry sector, whatever, you can find either JETS, JETS, it's for airlines. There's probably one called food for restaurants. I don't know what they are, but
yeah,
they do them for everything. SPY it's for the S&P 500.
Like I'm in one it's like a fidelity free, like it's like kind of targeted to my retirement year of 2045. So it's called like the Fidelity Freedom Fund.
So what does that mean?
2045. Well, I don't know. How deep should normal people get into their ETFs to know what they're investing in?
If you get a broad-based ETF of a lot of good companies, SPY.
What is that one?
S&P 500. It buys every company in the S&P 500.
Oh, SPY?
Yeah, when I short the stock market, I'm shorting SPY.
Oh. SPY stock.
Guys, investing is fun and can be fun, but find the investing style that makes it fun for you, and you will do well. You know what I mean? I found options a lot of fun for me. It's a way for me to add income to my portfolio. I like value investing. I like reading financials. That's fun for me. I'll do that. I tried technical analysis. Pass. That's speculating. But the whole point is find what works for you and go do it. Gary and I differ. He doesn't think I go deep enough. So here's the deal. I read 10 years of financial statements, profit and loss, balance sheet, cash flow. I read the 10K. I read or listen to earnings calls, things like that. He goes, go deeper. That's his idea. But Gary also admits that he is very, very risk averse. Like he's scared of what the heck's going to happen. Me, I am scared too, but I look at it going, my goal is to buy dozens of companies. And if most investors should be at the 10,000 foot level buying ETFs, I'm probably at the 100 foot level and Gary's at the 2 foot level. I'm comfortable saying I'm going to be at the 100 foot level and I'm going to buy 30 or 40 companies, 50 companies that fit that 100-foot level, and I will be wrong on a few of them. I will be really, really right on a few of them, and I will be do pretty well, and the rest of them I should be able to beat the market.
Going back to fear of missing out.
Yeah, FOMO.
I guess I think that if I'm just buying some boring ETF,
Yeah.
that I'm missing out on these enormous gains that I might be getting from a Tesla or an Amazon.
It's possible. Listen,
You keep coaching me on how I'm not really missing out.
But by the way, I'm okay with somebody saying, I'm going to take 5% of my portfolio and just dabble in those. But remember why I told you to sell Amazon and Tesla and Bitcoin? Why did I tell you that?
Because it was making up like 60% of my
portfolio. And I was like, Seth, you have 60% of your money in the 3 most expensive things out there. Like literally you told me, give me the 3 most overpriced expensive. I said Amazon, Tesla, and Bitcoin, and you had all 3 of them. I'm just like, could I be wrong? Which the market's told me I'm wrong lately. Yeah, but I look at it going, if I'm right, your 60% could have literally dropped by 80%, 70%. And at that point, I'm like, is that really worth it? Are you going to get the upside for that downside risk? So everybody, when times are good, people forget the downside. But the downside risk on those 3 items is probably 80, 90%. Maybe Amazon, I think Amazon's worth $500 or $600 a share right now. It's at $2,400, $2,500. I think Tesla's worth negative money. I think Bitcoin is just fugazi. Whatever.
Fugazi. That's funny stuff.
That's funny.
You haven't used that in a while.
I know. So I don't know what. My whole thing is when you're investing for the future in your retirement, your job is to be broad based. It's when you're saving for the future in retirement. Your job is to be very widespread. That way you don't see. Listen, it's 70-80% of mutual funds don't even beat the market over a 10-year period. So why are you trying to beat the market? Just buy an ETF of SPY that matches the market. You're done. Go home. Sleep well at night. Done. Yeah. And over 30 years, the market will go up. There you go.
At what point can people start getting into the side hustle of maybe increasing their wealth and becoming someone different from the normal?
Day one.
Oh,
absolutely. You have to make the dedication of I'm going to go learn, though.
Yes.
You were surprised to hear me say that?
I figure you might need some sort of amount in the bank or amount to make.
I think it should be a percentage of your assets you start with. But if you start doing well and start getting comfortable and start realizing that, for me, so Mo and I went to dinner yesterday, and he asked me something about 2009 and 2010 when we were buying real estate. He goes, well, how scared were you buying the real estate back then? I go, what do you mean? He goes, well, weren't you a little fearful? I'm like, 0. Literally 0 fear. I have more fear buying stocks than real estate. For the real estate, I have 0 fear buying real estate. It's amazing to me. I don't know why it's 0 with real estate. Real estate, I do think, is easier than stocks. Stocks is very difficult because even me, I still log into my Merrill Lynch account and see, what am I doing wrong?
Nothing. Just checking.
I look at my Merrill Lynch account and I still see the plus and minus every single day. Like today, the market's up 3%, so I'm down because I shorted the market.
Yeah.
So I'm down money. Now, I'm okay with it because it's been up and down, up and down. But if we all of a sudden had 10 days in a row of the market going up and I see that negative number 10 days in a row, that's going to weigh on me.
Yeah.
Or when I start buying stocks, more and more stocks. Right now, I'm still only 3 or 4% stocks. When I start buying more and the market starts to go down and I start seeing that number, I'm like, wait a second. I bought these because they're good values and they keep going lower. That will weigh on me. But as I go further and further, I will train myself to be more like, okay, Paul, you're not buying this for today. You're buying this because you think years from now when the economy is normal, these companies will do very, very well. And that's that. Like, look at Southwest. I bought Southwest at 25, legitimately hoping it went down further, and it went straight up. But I feel like I've done enough. I look at Southwest going, I've done enough homework on Southwest that if it dropped to $15 tomorrow, I'm a buyer of Southwest.
Still?
Yeah. Dropped to 10, I'm more of a buyer.
Wow.
Yeah. Foot Locker, I like Foot Locker. It's a retail establishment, but for some reason I like Foot Locker. And I want to buy Foot Locker. There's other things like that, and I'm not telling everybody to go buy Foot Locker tomorrow. The other thing is, my friends will hear me say something and they'll go buy it. I'm like, guys, you need to be buying 30 or 40 things that I say because any one individual one of them could go wrong. I'm actually liking Carnival Cruise Line. And I'm a buyer of Carnival Cruise Line at some point. I haven't bought any shares directly. I've sold, and I won't get into it too much right now, but I've sold puts at certain prices where if it falls that low, I will be buying them. Because I look at these things saying, okay, most money can be made when there's uncertainty. And there was a lot of uncertainty in airlines and cruise lines. So I picked what I thought were the most financially stable ones and went and bought them. if they were worth the money. And I'm like looking at the numbers going, okay, in a stable economy, what are these things worth? Holy cow, a lot more than they're selling for right now. Yeah, I'm okay with this. So that's part of the investing process. That's investing. Understanding income statements, balance. If that rings true to you, you're going to do very well. And I'll give you some books to read. If it doesn't ring true to you, find something else that will ring true to you.
Maybe just being a saver.
I think being a saver is a great thing. Be obsessed with saving. Right?
Yeah.
Be obsessed with saving. You'll do quite well.
I've had a variety of side hustles, and so I guess the saving has given me the peace of mind to maybe take a chance on some side hustles.
Yeah. I think you don't give yourself enough credit for how much savings you have.
Yeah.
You sometimes think like, oh, I'm broke. I'm like, oh, I told you the other day, when we were doing the math, I showed you a path to $10 million by the time you're 65 or 70.
I told Beth about that.
What'd she say?
Well, it's very relieving to know that even though
it's not a guarantee, but you still have to do some work on it, but still.
Yeah, it's not a guarantee, but I mean, it's kind of relieving to say, even if nothing changes, if my company doesn't go big, if the podcast doesn't get 500,000 subscribers,
million,
even if nothing happens,
you'll still have that thing.
Pretty dang good.
And that's the way, you might be surprised to hear it. How many businesses do I have? How much money do I have in the bank? And that's the same way I think. I think to myself, okay, well, if I don't do this one well, I got all these other things. If all, like real estate to us is kind of like if every other business fails and I suck at stocks, I'm really, really good at real estate. And we're always getting better. And that will do well for me anyway. That's what we always joke about. That's why Andrew, his full-time job is finding real estate for us. Because to me, that's the bread and butter. If everything else fails, all right, we got real estate. And real estate will make us more money than we ever need. And we'll be able to do whatever we want to do.
What about for normal people? When can they start? You're saying start now. Learning?
Just start learning. Go find a way to learn. It's not very difficult to learn.
I mean, I guess we started this show talking about what stocks to buy.
Can I brag about something?
Go ahead.
Do you know how much time I spend? I started calculating recently how much time I spend every day reading and doing that stuff. What do you think it is? Number of hours a day reading. When I say reading, it's not just books, but it's books, it's articles, it's financial statements. I should say this. How much time do I spend studying? And not just work stuff, all studying combined.
90 minutes.
Oh, no, it's easily 5 or 6 hours.
A day?
Yeah, a day. Easily. And I'm not saying
who's got time for that?
Well, if you make it your job, you do.
Yeah.
That's my job. But that's the thing I've chosen to do. I've chosen to sit there and study and study and study and study. That way, when I go, when we find a company to buy, I've looked at 100 companies, maybe 50. I don't know what the number is, but it's such a grueling process. And then from there, I'm learning more ways at night when I'm reading in bed or reading at my kitchen counter when I'm eating. How do I find more ways to make money? How do I understand my process better? I don't mean it as a way of bragging. I just mean it as if you're out there thinking that there's just this like magic formula to getting 20% returns, you're out of your mind. And that formula he talks about, he says it does 30%. I've read articles that say, I don't know about that, but it's a process.
So instead of worrying about stocks, what can listeners be doing to move this process along?
Find the area that you want to become good at that rings to you. When I was a kid, I wanted to own a business, but I never wanted to own an investment business. I said, investment businesses are boring. I want to make a product. And then I started realizing, but this is me. I'm an investor. Go learn this very well. And I'm lucky I'm 39 in a few weeks, and I've got 70 more years of living to learn. And I'm sure I'll be 90 going, there's so much to learn.
Yeah.
Right? Most people stop learning college is done. I'm done. No more learning.
Yeah.
And it's just, literally 5 or 6 hours a day I spend studying this stuff because I want to get better at it. So, find what makes you want to go do more of.
What if they don't know? What if a listener says, I want to get into real estate because that's what...
Go watch a bunch of videos on YouTube about real estate and see what makes sense to you. Don't fight it. It's okay if somebody who's doing very well, if you hit there and go, that doesn't make sense to me though. It's okay. That is perfectly fine. If you see somebody who's doing, there's multiple ways to skin a cat. Find the person that goes, wait, that makes sense to me. Like when I started doing this option stuff, the second I heard it, I go, that makes sense. I didn't go, wait a second. Now, of course, I had my questions like, wait a second, is this real? Because it made so much sense to me off the dribble. I was like, is this too good to be true? And there are risks involved, but I understand those risks now. And I've beaten a dead horse. I've asked 20 people who do it. What are the risks in this? And they all say the exact same thing.
So what are the common misconceptions people are missing when they say, boy, I should buy in on this stock? What are they not thinking about?
If you and everybody else is saying that, you got a problem. When mainstream is doing it, you don't want me to have this?
Well, you're shaking it on a podcast.
I'm sorry.
Go ahead.
It's like my little baby rattle.
Maraca, yeah.
Maraca.
Like our friend that said, hey, this stock's going up. Should I buy, Paul? And you kind of chuckle going back to that. Like,
why did I chuckle?
Because I now know that there's so much that goes into investing in a stock.
And everybody thinks there's this hot stock tip. No. The hot stock tip is the one you don't want to own. You'd be like, what? I don't want to own that company. It's boring. Exactly. Because everybody sees the exciting companies going up. Oh, I always bet on excitement. Oh, cool. Sounds good. You know what's funny? In this other book I'm reading now, when they look back at data going back to 1928, one sector underperformed the market big time. Guess what sector that was? Information technology, IT. Why is that? So it's so funny to me. All these morons out here who'll tell me, Paul, but technology is changing. Every decade, technology is better than it was in the past. It's different than it was in the past.
Yes.
In 2000, that was changing the world. Is our technology better than today than it was in 2000? Is it better in 2000 than it was in 1980? And every single time, the hype is in IT, in some sort of technology companies. The hype's always there. So everybody goes to them, and what crashes? What doesn't perform? Because the more you pay for something, the worse it's going to do. That's just a reality. The more you pay for something, the less your return is.
Yeah.
It's not a coincidence. It's the second he wrote, and guess what sector? I was like, oh, it's going to be technology. And sure enough, it was IT, information technology. Because everybody's always like, oh, that's exciting. That's changing the world. Guys, stop saying it's changing the world. Please stop saying that.
But it is, Paul.
No, it's not.
Tesla and internet.
No, internet changed. That's what I'm saying. In the last 100 years, there have been three things that have changed the world: flying, cars, and internet. Mm-hmm. Other than that, shut the fuck up. Computers, fine. 4. I'm looking at going, 4 things have changed the world. And internet, you could eliminate internet and just say computers. So cars, airplanes, computers.
Yeah.
3 things that changed the world.
The rest has all been pretty much the same.
The rest has all been some variation of those.
Yeah.
When I see people pitching me businesses like, oh, I'm going to change the entire world of blah, blah. No, you won't. Stop saying that, because all you're trying to do is give yourself a reason to go pay more and more money for that. Just realize that Tesla makes a really good battery. Mm-hmm. That's what they do very, very well. That is awesome. Keep on trucking with that. By the way, it's a nice car. I had it last week for a day. I did enjoy it.
Do you want to switch for a couple days?
If you want to. When's your anniversary?
Well, obviously I want to. I mean,
I just look at it going, we got to stop saying that all these companies should be bought at any price because they're changing the world. They are not. And one of the companies that did change the world, Microsoft, 10 years ago, people were like, this company is dead. And literally 25 years before, it had changed the world. Yeah. Every company that has changed the world at some point is considered a dead company later on. Because it's not sexy enough. It's not going up. Because it already went up a ton, and then it stops going up a lot. Stop thinking these things will change the world. Start finding the boring companies that are just really, really good at increasing revenue and profit at a slower pace.
Companies like?
Right now, I don't know. Because everything is overpriced. But someday, Google will be a great company to own. Someday, Microsoft will be a great company to own again. But the stock will be great to own because they'll be considered boring again.
There's no companies that are great to own now?
Isn't it weird that Microsoft is considered boring and dead at $22 a share, and now it's considered amazing and has so much growth potential at $180 a share? Explain that to me.
I don't know.
Exactly. And when Tesla finally does have its day of reckoning and isn't $1,000 a share anymore, they'll be saying it's dead. So at $1,000 a share, it's the future and changing the world. At $100 a share, it'll be dead. Now, what's changed fundamentally in that company? If somebody tells me, oh, the financials changed, then you're an idiot because the financials are garbage.
Financials were never there to justify the price.
Financials are never there anyhow. But everybody's going to react to what they see. Mr. Market tells them is the price.
Yes.
And they're going to give them have you noticed in the last week, when the market goes up, it's because, oh, we figured out Corona. And the market goes down. Oh, no, another bout of Corona is coming. Every day it changes.
Well, that's
Does
the
that
swings.
make sense?
That's the whole point of this book I brought up. That's exactly what he says. Does that make sense? And the answer is no. And like he was saying, how can the price of a company changed so drastically, but the value.
So I watched a video of his, and it's wonderful. He says to people are like, "Oh, these good companies."
This is Joel Greenblatt.
Joel Greenblatt.
It's Baum.
No, it's not.
I said Blatt, and you changed it.
No, you said Baum. Book it. Want to bet?
No, I don't never want to bet with you.
Well, you should bet with me. I get things wrong all the time.
You know who I'm thinking of is Mark Baum from The Big Short.
Yes. So
what was he saying?
He writes. He says invariably in every class I teach, somebody says to me, "How can I buy good company at lower prices? I can go down that much." And he says, "Give me a stock." And they rattle off 20 stocks. Yes. And he goes, "Look at their 52-week high and low. They're always huge differences.
Yes, roller coaster up and down.
They're roller coasters." That's the whole point. Every company is still a roller coaster in some fashion.
Mm-hmm.
The question is, can you buy it when that roller coaster is below the point of where it makes sense to own it? Not at the bottom. And he even says, he's like, we've never timed anything at the bottom ever. He even says in one of his videos, I never, he's like, in my 30-year career, I've never bought at the bottom.
So
that was very reassuring for me to hear because I always get worried about that.
Something like a stock like Tesla. Something like a stock like Tesla. What if they actually start making money? What if they're already at 1,000 and they start making money? I've seen articles saying they're going to go to 15,000.
Good for them. For them to justify 1,000 a share, how much money do they need to make right now? Right now, they're worth how much more than Ford?
They're worth $60 billion more than Ford.
No, more than that. What is the market cap of Tesla? $184 billion.
Oh, it went up. Wow.
What is the market cap of Ford? $26 billion.
26.
So, it is 6 times larger, at least, in market cap.
I know.
So they need to make 6 times more money than Ford.
No. I'm just saying, you're thinking about it too methodically.
You mean logically?
I'm thinking, well, if they're at 1,000
yep,
and everyone loves them, what happens when they really start making money next year?
And then some point, somebody will be like, wait a second, there's always a capitulation point, always. Name me one thing that over decades and decades and decades and decades just went straight up.
Oh, I was going to say the economy, but not really.
Straight
Inflation?
up. Straight up. No, we've had deflationary times.
Straight up?
Straight up. And inflation, by the way, let's talk about inflation. Let's say it's inflation. Because when I would say deflationary times, like a quarter here or there, prices go down, whatever.
Mm-hmm.
Inflation's 3%. People want 30%. Okay, 30% gains. Let me ask you this question.
Yes.
How long do people think Tesla will have 30% gains? 10 years?
Okay, 10
years. That makes it in 10 years, instead of being a $180 billion stock, it will be a $2.5 trillion stock.
Is it possible?
Anything's possible. How many cars have to sell for that?
Well, apparently it has nothing to do with sales.
And that's the whole point. We're saying that the price of a company, to buy a company, has nothing to do with the sales and profit.
Yes.
And I rest my case.
Well, that's our show.
Here's the cliff. Here are the lemmings. And boom.
Everything money. Thanks for following. Be sure to like. Paul, we didn't do our moment of likeness.
Moment of likeness, everyone.
Yeah. Like the button below.
How are we going to get 1 million subscribers if we're not doing the moment of likeness? How are you going to get a raise then?
I know. It's tough. I'm just going to invest in Tesla. If you like what Paul has to say, if you like my questions, comment below. Should we be asking more? Comment below.
Like, guys, because I need to give Don and Seth more money.
Follow the Everything Money channel on YouTube. Thanks for joining us, Seth and Paul.